Good morning. My name's Landon of the West. Thanks for being here. I've got with me today the Rebellionaire crew, and that starts with Bradford Ferguson, the owner of Rebellionaire, as he checks his mic. Come on out, Bradford. Rebellionaire, and then his partner, Matt Smith.
We're going to switching you.
Me. Actually, if anybody's ever been in spaces with me, you know that I don't really need a microphone. Okay, this is workable. Yeah, so I got Bradford Ferguson, I got Matt Smith. Why should you listen here today to the Rebellionaires? The Rebellionaires, they do financial management, but these aren't your typical finance bros. These are guys like us. This is a team that loves Tesla, loves the products, and wanted to find a way to work with the community to help people manage perhaps highly concentrated positions. So are you guys all in on Tesla? You don't have to raise your hand. I know a lot of us are. A lot of people like that Tesla stock. Yeah. So we don't want money managers that are going to tell us what the traditional Wall Street guys do. No. What do they sell? What do they say? Do you guys have a traditional money manager? Do they look at your Tesla all-in portfolio and they say, oh boy, I don't know what you're doing here. Maybe you guys could carry 10% Tesla, but I need to get you into some index funds. I mean, that's the best for you, really. No, we don't go that way. I like investing in Tesla, and these guys want to find a way to keep us invested in what we want to be invested in and still grow our portfolios in the years maybe where the stock is not doing a 2019 run, huh? We don't get that every year. We wish we could. These guys know what to do in the interim. I'm not sure I do. I just kind of sit here and watch the stock. I don't even watch the stock every day. So our conversation today is with Bradford and Matt, and I don't expect you guys to get out your checkbook. So don't worry, this isn't a sales pitch. I mean, if you've got a couple of $1 million sitting in the truck over there and you want to come up, they will talk to you today about that. I think they could put that to work. But other than that, I'd love to have a conversation with Bradford and Matt that is about investing that's interesting, investing in a company that we like, because that's what I was taught about investing. Did you hear that? Were you taught that? Invest in companies that you love. Companies that you are interested in, right? You love the products, you love the people. That's what we're talking about. Thanks for being with me here today, Bradford and Matt. Bradford, how are you different at Rebellionaire? And how did you start what you've achieved today? When did you start? How did you start? Did I see you at Cyber Rodeo?
Yeah. So Cyber Rodeo is when I decided to help all-in Tesla people. I had kind of been fighting for that, but I talked to a lot of people there, and they told me what Landon said is they would, even though you've been managing the money on your own, they would go to a financial advisor, and a financial advisor would see all this Tesla, and they'd immediately get uncomfortable, and they would laugh at them. The financial advisor would laugh at this person who is in Tesla and has beat Wall Street. So like imagine beating the crap out of Wall Street by not listening to it, and then a financial advisor laughs at you. It's really offensive for one. But then the second thing they say is you have to sell it all or sell a big chunk for us to give you any advice. So what we've done is we found a way to work with people who have a high percentage in Tesla, and to help with things like we do cover calls to generate some income. We do trimming and adding to take advantage of the emotional highs and lows. We'll invest in some other high growth companies. So we have a channel on YouTube where we talked about some of those companies.
YouTube is where a lot of people are getting information in the last 20 years, right? And Elon has said things like, maybe you don't need to go to college. Elon has got a lot of kids, right? He talks about his kids showing him how they've learned things on YouTube that traditionally we'd have to have a college education for, we'd have to have an MBA, some other things like that. But I guess what I was interested in, you said covered calls. Can you define just for us, what is a covered call? How does that work? Because you said that maybe I don't have to sell all my Tesla if I work with you and you employ some covered calls.
Yeah, so covered calls, for those who are not familiar, is basically you're selling on a time-limited basis some of the upside of owning your Tesla shares. So Tesla, as you all know, does not pay a dividend, but it's kind of a way to get a dividend type of yield out of it. So we're not trying to like swing for the fences and get home runs, because the reason you have a concentrated position in Tesla in the first place is because you believe there's going to be some revaluation event. And so if you get really aggressive with selling covered calls, you could lose your shares or a good chunk of your shares right when that revaluation event happens. So we're actually like very data driven about this. We don't want to like do some exotic strategy like selling covered calls just for the sake of it to look fancy and like, oh, like, look how competent we are because we're implementing this strategy. And oh, by the way, sorry, we lost 30% of your shares when Tesla finally revalued. So we went back through a bunch of data. Bradford did this amazing exercise, actually going through like over 2 billion rows of data. Like so basically backtesting a bunch of different covered call strategies. And what we found is that actually most covered call strategies do torch value, meaning you'd significantly underperform a buy and hold. So we do it with a significant margin of safety. And I think what was most surprising to us about kind of digging through the historical data was we kind of assumed in 2020 when Tesla went absolutely parabolic, that every covered call strategy would have lost then. But what was actually most surprising was with a significant margin of safety, that was actually the best year to be doing a certain version of the covered call strategy. So a lot of people have this fear that, if and when Tesla, revalues again, they don't want to lose their shares with covered calls. And so, like I said, we're not trying to knock it out of the park. We just think it can actually outperform a buy and hold. And so we did that historical data kind of digging, and then we couple that with a more qualitative approach. So we're looking at what's going on with Tesla, what could be potential catalysts, and we're actively choosing not to participate in some weeks when we think there's a catalyst that could drive the stock higher.
That's fantastic. I told you I wouldn't even try to announce your title to the crowd. But Vice President, can we go with that? Is that pretty good? That's great. How long have you guys worked together?
What's that?
How long have you guys worked together?
Yeah, so it's been 3 years now. Yeah, 3 years. A little over that, launched Rebellionaire, and Matt joined me a couple months after that. Yeah, so it's been a good time. And so what else here? Let's talk some Tesla and SpaceX.
Okay.
Maybe the merger too.
Well, yes.
Yeah, so a lot of our clients are Tesla shareholders, and there's been a lot of talk about a merger, and like there's some people advocating for like a really fast merger between SpaceX and Tesla. And I'll say that SpaceX shareholders would love that, because like Tesla right now, in our opinion, is not being valued for a successful robotaxi, because that hasn't happened yet. They're not being valued for Optimus, but we think it's highly likely that Tesla is going to have a successful autonomous business with the robotaxi and cybercab. That's highly likely, but it's the stock at $400 does not reflect that. So like there's all this pressure to do a merger suddenly, and I understand why. I'm generally in favor, but with my Tesla shareholder hat on, I don't think it's fair to Tesla shareholders. I don't think it's right. And maybe Matt, you could add a little to that.
Yeah, I just think it warrants some, conversation. If you're a Tesla shareholder, it obviously matters a lot whether you have, say, 2/3 of the combined entity or 1/3 or something in between. So really, I think all we've been trying to draw attention to is like the price matters, the exchange ratio matters. We completely understand the strategic reasons it makes sense, and like Bradford said, are generally in favor of it. But we don't want to be just kind of blind cheerleaders saying, yeah, let's do it. And then like all of a sudden we find out that we only own, say, 20% of the company after a crazy SpaceX run up or something like that. and we've lost our voting rights because Elon's got the super majority, voting shares. And then on top of that, that's like probably right when Cybercab goes crazy and we start getting a little bit of the credit for that. So just the price matters is really our view.
And let me help connect the dots. So if Tesla owns 33% of the combined entity, if it was instead 66%, you would have twice the amount of economic interest in the combined entity as you would otherwise with your same Tesla shares. So this is why it matters. And this is why I don't want there to be a rush into it. And I want Tesla to be, to have a successful robotaxi business first.
Let's back up a minute.
Yeah.
When we talk finance, I like to keep it real. And you guys are so good at what you do that I count on you for the technicals. And then I take it back and I talk to my buddies and I try to keep it real and say, what does this mean for me? How does this matter? So how did we get here? How did we get here? Did Elon bought Twitter? Right? I mean, it seems like a long time ago, but it wasn't that. So he wrote a check for 44 billion with, 6 of his closest friends, right? Something you probably do it every day, right? No, that's wild. So Twitter, all of a sudden he owns Twitter. Maybe it's called X now. He changed its name. It's X. Then we have XAI. And XAI is what? It's a bunch of computers, isn't it? It's a data center. It's working towards that AI future we want with Grok. Does anybody use Grok? There's my Grok users. That's fun. You got ChatGPT, you got Grok, you got some of these others. Grok is fun. Grok is unhinged sometimes, but Grok is what I see as the face of XAI. So one day I wake up and XAI bought X. XAI bought Twitter. This is interesting. Okay, I like it. Elon got had a liquidity event, as we like to say. So XAI buys X. What's next? Now SpaceX. SpaceX merges with XAI, or was that a buyout? I don't recall.
They bought the shares.
They bought the shares. Got it. So now we have SpaceX that owns XAI, that owns X. So when we're on Twitter, when we're on X every day, we are on a platform that if you own Tesla shares, you technically own X. You own Grok. You own XAI. Maybe it's not very much. Maybe it's just a little bit, but it's kind of fun to say. So now, as Tesla shareholders, we all own Grok, we own X, we own XAI, we own SpaceX to an extent. So now we're going to merge, but maybe, let's see, Tesla's a public company. Boy, Elon doesn't like public companies, or does he? I remember Elon talked to us about being public and Tesla. Oh boy, you got to have quarterly shareholder meetings. Or shareholder meetings annually. You got to have quarterly reports. You got to get on the line. You got to take questions from industrial, investors, institutional investors that ask questions like, what do you think about hydrogen? What do you think about LiDAR? Why aren't we using LiDAR? These are the questions you have to answer when you're a public company. So Elon says, well, I don't like public companies. Maybe he's changed his mind, because what happens with SpaceX next is an initial public offering, IPO. You heard about this? We want to talk about the IPO a little bit, because the reason I bring it up, a lot of people think that Tesla should merge or shouldn't merge with SpaceX, but probably after SpaceX is a public company, because Tesla's a public company. Does that make sense, or am I off base? Fix me up there.
Yeah, so it would have to be after SpaceX is a public company, because that's coming in just a week and a half or so. There would have to be a separate shareholder vote. So this is all a little bit of kind of rumor or scuttlebutt, but Elon has been talking about this, so it's not exactly coming out of nowhere. So my sense is, everyone has different kind of opinions on the timeline of when this might happen, but this would be very complicated in terms of combining these companies. Elon's got these two different compensation packages at both companies. So if they both combine, how do you kind of unite those in one manner? And that's just one example of a potential kind of headache or question. And there's going to be many of them. There's going to be shareholder votes. There's going to be a big battle about that. So my sense is all that's going to take a lot of time from whenever Elon decides that it's time to kind of have that conversation and push for it. So I would guess it's kind of next year-ish before anything would happen. But really nobody knows. We're all kind of guessing at it.
And I just think like the potential combined entity is pretty interesting. So like probably this time next year, robotaxi should be really starting to scale in a big way. Like finally, it's got to happen. Maybe it won't, but it's got to. And then after that, like Optimus should be coming online, like within the next year after that, and then the next year after that, Terrafab's coming online. And then the year after that, the satellites in space are scaling. So it's like you're going to have these huge events year after year, at least for like a good 4 years. It could be a really wild 4 years.
Well, let's talk about robotaxi for a minute, because I drive a Tesla. You drive a Tesla. You drive a Tesla. You guys drive Teslas, I bet, because you're here at a Tesla event. Maybe there's somebody here with no Tesla. In fact, I talked to a Tesla employee backstage, and I asked him which car he drove. He says, I don't have a car right now. He says, I'm working on my fitness. I'm getting in shape riding my bike, and I'm working on Cybertruck next. But let's talk robotaxi. What is robotaxi? Well, it says taxi in the name. What is cybercab? Why do we have two names there? Cybercab, robotaxi. Well, the current state of affairs is that robotaxi are Model Ys, and they're driving around autonomously, getting ready to be in about 11 states, but currently Texas is kind of a big focus. Why is Texas a big focus for robotaxi? Well, Texas likes business. And they say, come on in, let's see what happens. It's the Wild West. I'm Landon of the West. I'm from Colorado, and I lived in Texas, lived in Houston for a long time, went to school there, and it's true. They like to support business. They like to support the future. And Texas is really interesting. If you haven't checked in on Texas, the great state of Texas in a while, it's an oil state, isn't it? Is it? Texas has had more wind power, more solar power, more green, so-called green energy, love it or hate the term, than any other state in the last 10 years. That's Texas. And even California, that's amazing. Tesla's all about California. Maybe not anymore. Texas now. Robotaxi. Has anyone been in a robotaxi? Maybe Austin, maybe Silicon Valley. Anybody? There we go. There's a robotaxi. I was in a robotaxi, autonomous in Dallas last month. I got into this Model Y, and it looked just like my partner Angela's Model Y. So this thing pulls up, and I'm like, is this a robotaxi? Oh, yeah, it says robotaxi on the side. So why are we talking about robotaxi? Because it's a big component of the business and a huge growth opportunity, a liquidity event, so to speak. Now, this is going to be changing our world, I believe. And this is right here, right now. If you're listening to me, this is where I lose you. This is probably where some of you say, I don't know. Autonomous, I want to own my car. I want to drive my car. I want control. I want to have control. This is just like FSD. Why is it going left here? I would go straight. Now, robotaxi, I believe it's our future. Elon said, don't look for it on the financial statement in a big way in 26, maybe Q4 26. But just like these men are saying, their analysis, it's all about 2027 for robotaxi. Why would anyone take a robotaxi instead of an Uber? Well, you can fill in the blank because you've all taken Ubers. If it was a great experience, you want to continue, maybe you will, but Tesla is going to be less expensive. It's going to be nicer, and there's not going to be that person in the car that you have to interact with that you don't want to. So that's robotaxi, and that's going to add to the bottom line for Tesla, I think, my opinion, like nothing else in the last few years. We saw the Model 3 ramp, and that really was a big component. We saw Model Y. A lot of you are driving Model Ys out here today. It's the best-selling car in the world. Nobody believes me when it comes to that, but the cars you guys are driving are the best in the world. So robotaxi is going to, Josh, you're projecting a little bit. Josh, can you keep it down over there, please, buddy? Josh West 247, ladies and gentlemen. No, don't go there, sir. So robotaxi is going to be a key component of the business. You're talking about 27. Elon talked about 27. Why is that going to happen? How is the money going to go from robotaxi to the finance statement?
Well, the finances is Matt. He's our finance nerd.
Yeah, so kind of getting back to where we're different from Wall Street is like we are very comfortable modeling out an exponential growth in the robotaxi network. It just seems very clear to me, driving FSD every day, how good it is. It's clearly safer than I am and safer than an average human. And so as they figure out these operational issues that they're kind of on the tail end, I think, of trying to figure out how to actually operate, how to pick up and drop off at an airport, some of these non-safety issues that they're working through right now. What they've built, as you all know, is a generalized, scalable model that will work across the entire United States in delivering a fully autonomous, safe customer experience. So they're capable, the software is capable of doing that right now. I have modeled this out in tremendous detail in knowing like the cost per mile, and they should be able to drastically undercut Uber and Lyft in terms of pricing. And in the long run, I think they're actually going to undercut the cost of personal car ownership. And so when you're thinking in those are the kind of addressable markets. It's not like you're looking at Uber's miles and like, okay, how many Uber's miles can I take? And you model it out with that kind of like Wall Street vision of what the TAM is. That is just completely the wrong way to look at it. This is going to be something that is disruptive to the entire kind of car industry. And I think it's going to be millions and millions of these robotaxis on the roads, and even at a low cost per mile, like $1 per mile, or eventually even lower, the economics of Tesla are just wild. They're going to be printing billions of dollars in earnings. So we've been in this period, as many of you know, for the past 4 or 5 years, where Tesla's financials have been a little kind of lackluster. The growth hasn't really been there. Gross margins have gone the wrong way for a long while now. And so we've been kind of waiting for that next leg, and robotaxi is that next leg, and we think there's another leg after that with Optimus. But like we've modeled this out. We think it's going to be a huge driver to Tesla's financials and therefore their valuation.
Now there may be some of you who are like, Uber and Lyft, big deal. I don't use Uber and Lyft that much. I just use it when I'm traveling, big deal. But there's a lot of people who rely on Uber and Lyft. And surprisingly, in a city like Indianapolis, 2/3 of Uber and Lyft riders, and I've been a driver, so 2/3 are using Uber and Lyft to commute to and from a job that pays $15 an hour. And can you imagine losing more than an hour of your pay just for a little commute? And why they do that? Well, insurance can be very expensive if you're young, be $2,500 a year. Parking can be very expensive downtown. Maybe you have a problem with driving record, or you can't front the money for a car. So this is a big deal, and it's going to be a really big deal for middle America and the working class.
Middle America is part of the country I don't have a lot of experience with. I've been around Colorado a lot of my life, and we're so happy to be here. The hospitality for Angela and myself has been second to none. So I want to thank you. If the Michiganders are here, and we know they're here in full force. We want to thank you for hosting, for having us here. But you guys are not New York City Wall Street guys, are you? I wanted to move back and just talk for a minute before we get towards when they're going to say, hey, it's time for the next people to talk. Get the hook, right? Get the finance guys off stage. Can you tell me a little bit about Indiana and a little bit about Michigan and what we should know about how a financial services company works for people like are here today instead of people that want to invest with Wall Street money managers?
Yeah, so the thing that we focus on is finding companies. Well, let me say it a different way. So there's this bias Wall Street has against growth companies in general. Like sometimes they get the memo, but like until the earnings come, they're really uncomfortable modeling, you know, massive growth. It's similar with the media. So like the media doesn't just FUD about Elon Musk and Tesla. They FUD about anything that's new and exciting. So what you're seeing a lot right now is around AI, a lot of FUD about AI. And what we try to do is to navigate that and find other opportunities. So, you know, Elon, that we love the vision that Elon has, and we're big believers in it, and we're invested in it, and we drive the car. We think there's a lot of other opportunities out there that we've been able to find.
The other thing I'd say is just how structurally different I think we are. Is like Bradford and I, you know, I guess technically we're institutional investors, but like, I don't know, the way our brains work, we really are more kind of retail oriented. I mean, Bradford and I were, you know, DMing each other back in 2019 about what was going on with Tesla and this huge exponential that we were seeing that Wall Street was not seeing. And so that, like, we're comfortable making aggressive assumptions. We're also comfortable being wrong. Like, you know, for example, I modeled a very significant increase in robotaxi revenue second half of this year, but that's not going to happen. So that model was wrong. It just got pushed back. I'm completely comfortable, you know, being wrong and having a crazy projection that like a lot of people would laugh at. I just think it's the truth, and I want to like orient towards finding the truth. And I know I'm going to be wrong, but it's like Elon said, the goal is to be less wrong over time. So like there are the Wall Street kind of mode of thinking, I think, is very, you know, kind of don't do anything too dumb or too risky, you know, that would get you fired or make you look like an idiot. If you kind of follow the pack and you don't do anything that's like too different from that, you're going to be safe and you'll have a good career. And I don't know. I find that very off-putting, and it's just not the way that we think or operate.
I'd like to talk about, let's see if I can remember some of my psychology from back in the day. Is it Dunning-Kruger? I mean, you guys all have Grok, so you could fact check me immediately. Could be totally off base. When you read something from the media, watch something on TV, watch something on YouTube, and it's a field that you know about. Maybe you're a teacher and you're watching something about teaching on YouTube. Maybe it's Tesla and you know a lot about Tesla. And when the media gets it wrong and you know about that thing, you say, wait a minute, that's not right. But Dunning-Kruger effect says that maybe they're not right about a lot of things, and I just don't know as much about those things as I do about Tesla. So what you're telling me is that if there's something about robotics that I don't know about, I should still be skeptical. Instead of just taking everything in that's on the boob tube, we know they're not right about Tesla. We know they've missed Tesla. We know they missed the Model 3. Bankruptcy, they said. But they were wrong. And they've been wrong about other things. And I'm so glad to work with people that say, hey, wait a minute. These guys are wrong, and we've got a plan to go a different way. Brian, how's our time?
Your time is looking good. What we're going to do is hand you this mic because it seems like this one's sorted out. I'm there if any questions. All right, guys. Who's got some questions for the panel?
So the question is about cover calls. Do we look at macro or technicals? Macro means the economy, looking at the economy, interest rates, and how things are reacting, like geopolitics. And technicals are the charts, like the candle charts with the red and green bars and stuff. So we rely on our research, and we rely on our read on the stock that we're selling cover calls on, and what's going on and how sentiment is around the stock. So like if we were doing cover calls on Palantir, you mentioned Palantir, we would look at, well, are people overly bearish on Palantir? Even the bulls, like you'll see on social media, like the bulls of Tesla or Palantir will lose patience, and they'll start what I would call like backbiting, or talking bad about the company or the CEO when the stock is down, because they're pissed the stock is down. And so like typically that's when the stock is low, and it might be a bad time to sell cover calls, because when sentiment is too low, this in general, stocks can pop up, and that can be a bad time to sell cover. But do we help people with Palantir or other companies? Not right now. If we do cover calls, we want to know that it's been profitable in the past, and we verified that in Tesla, but we haven't done that yet for like Palantir or NVIDIA.
Okay. Anyone else got a question for the panel? Anybody? What I would ask you, Bradford, is you see all the FUD. You see all the fear, uncertainty, and doubt, all the fear mongering on not just Tesla, but other stocks as well. What do you do to cut through it, to see the reality and not react too quickly?
So what I'll do is just ask myself what's true and what's opinion. So like when I went back, when I bought Tesla, I was working with my dad, but I was managing the whole investing portfolio, and I bought it in April of 2019. And I finally told him like 2 weeks after we bought it, because he's kind of like semi-retired. And I showed him a video from Gally on YouTube, and it was Galileo Russell with Hyperchange. And it was about a 12-minute video about Giga Shanghai, and it was Tesla's factory in China that was going to turn the whole company profitable. And after the video, my dad says, well, who is this guy? What credentials does he have? Who does he work for? And I said, Dad, it doesn't matter. Until the very last paragraph or so of that video, everything he was sharing was factual. Like the only the very end of the video was he inserting his opinion. So that's what we try to do, is verify what is fact, what's opinion, what competitive advantage a company has. If the company is experiencing some trouble or drama, is it something that's permanent or temporary? So those are the first things that go through my head. We also try to stay curious. So just constantly keeping an open mind and questioning things.
Did you have anything to add to that, Matt?
The other kind of example I was going to give is, just staying curious, like Bradford said. So we've been interested in the AI build out. So, as Tesla investors, we're very curious about the AI applications of Optimus and FSD, but we're also interested in the hardware and all the data center build out and the energy infrastructure that goes into that. So that's been a theme that we've been interested in. And so some of you may have seen a video we did on Micron recently. They had one of the most amazing blowout quarters, and the stock fell immediately after that. And we were just looking at it, and the narrative that the media was spinning, and that a lot of the people on X were spinning is, well, memory is a commodity, because historically that has been true. And maybe someday that kind of reverts back that way. But we were just looking at the actual magnitude of the shortfall, how long it was going to persist, how long it took to build these new factories. And we were thinking there's almost no way this shortage is resolved before 2028. And our base case is that it's probably going to last to 2030 and a lot longer. And so if that's the case, and this was a company that was trading at a PE ratio of about 4, which means the market is telling you they think that this is a commodity and it's going to revert back in pricing. So we didn't really care that the stock was falling. Like, we just thought that was true. So we bought for clients, and then it continued falling like another $100 or so after that. And we're like, well, we're still right. We're confident about that. Like, we're open to being proven wrong, but we think there's almost no way that we're going to suddenly get a drop in memory pricing. And so just kind of focusing on the truth and not the stock price movement. And the emotions that come with that, because like we were down, we looked, it was a bad move immediately, but we kind of stuck with it. And those of you who followed what's happening in that space, you know, it's up about double from where we first had it for clients now. And so trying to find opportunities like that and what's true and kind of understanding the emotions, because that is really important, but being able to almost look at them as like a contraindicator sometimes, and it's just a check on your own, you know, kind of what your own instinct might be based on what the stock price is doing is not the truth.
Okay, all right. Well, guys, thank you for your time. Thank you for your attention. Huge thanks to the speakers, Bradford, Ferguson, Matt Smith, both of Rebellionaire, Landon of the West, myself, also Rebellionaire affiliates, but on X, not like anything big financial and official. And you can find out more about them. They've got a booth right behind the white tents there. We're going to be back at the top of the hour with another panel. That panel will be all about adventures on the road. We've got a number of guests. You can find them in the program, but it is Jim Spencer, and I don't know who else on it. Here to Tesla, that's right. Josh West 24/7. And Troy, let's see, you're not on that one, are you? No, you're on. But we do have Chris Hilbert will be on that one. And then if you want to win a little tiny electric Silverado, our friends over there at Bennett Auto Group have a way you can enter to win. They've got some fun electric GM products over there on display you can check out. And again, I just really want to thank everyone for being out here. Follow these fine folks on X and you know, ask them all the questions you want to right behind us when you get a chance. Thank you, guys.